You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike Tusaw from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is Thursday. It is noon Central. It is 1 p.m. Eastern. It is time for episode 2 here of your bi-weekly options extravaganza known as the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from all of the fun live streams and everything else going on during the week over there on the Options Insider Radio Network. Of course, you know where to go to get all that stuff on demand on every platform under the sun upon which many of you are listening to this right now. If you like what you hear, keep rating and reviewing. And, of course, if you want to go above and beyond, get some exclusive shows, got Oddities coming back tomorrow. That'll be fun. A lot of odd stuff going on this week, so should be fun to dive into. Andrew and I were just bickering before the show about those Petrobras Jan 11 calls. So a lot to talk about on Oddities tomorrow and a whole bunch more. You want to check that out? You want to get access to our great Pro Q&As? Had another awesome one just on Tuesday this week with Dan the Man Gramza over there talking all things futures, options, and commodities over there. You know where to go. TheOptionInsider.com/secret club. It's a secret. Don't tell anybody. All right. And of course, however you listen live after the fact, keep those questions and comments coming in. We'll get to a bunch of you later on in today's Mail Block Thursday. But first, let's go around the horn. Let's go out to the Saintest of Charles, where we are joined once again by the Uncleest of Mikes, Mr. Uncle Mike Tusaw from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always happy to be here, broadcasting live from the Saintest of Charles.
Yes, the Saintest of Charles. Took me only like a decade to get around to that one. All right, and also joining us from the hinterlands of Maine. There's no real jokes to make about out there because there's nothing there. It's just the Giovinazzi fortress-like compound looming imposingly over the shores of Maine, always shrouded in fog and mist. Probably some lightning crashing down as well. There's a single tower jutting out from the northeast corner, and there's a single light in the window there, and that is where the Rock Lobster joins us from today. Mr. G, welcome back to the program, sir.
How you doing, man? I'm doing good. I'm just looking out at, yes, and by the way, it is dark and stormy and cold right now. It's like my least favorite weather, 34 degrees and rainy. Just bitterly cold, not even suitable for dogs.
See, I willed it into fruition for you. You are welcome. As we keep on rolling, it is time for the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, what is lighting up our screens, and not a heck of a lot going on today or indeed this week. So maybe we'll just wrap up the show right now, listeners. Nothing really to sink our teeth into unless you want to talk about this this Omicron thing. I guess maybe we could talk about that a little bit, unless you got something else you want to talk about out there. But it giveth and taketh away and giveth and taketh away, at least from a market perspective. We saw a huge sell-off last Friday, huge pop and vol. Everyone was waiting with bated breath. Will the sell-off continue on Monday? The answer was no. Rally ho mode, everything was behind us. And then Tuesday, not so much. We gave it back up again. And then yesterday, we started off green. And then everyone just got spooked. There was a case in California, a bunch of other things popping off that seemed to give a nice 1-2 gut punch to that rally. We ended the day off over 1%. And then everyone thought, well, what are we going to see today? What are we going to see today? Is it going to be another sell-off? And apparently we're back in rally ho mode today. So Omicron has certainly bestowed some new volatility on this market. If you're listening to our advisor's option program from earlier this week, and I encourage you, even if you're not an advisor or asset manager, or you're not in the market for one, check out that show. It had some good analysis on it called Devious Ways to Pay for Puts. Our buddy over there, Mr. Rock Lobster's neighbor, the Oracle of New Hampshire there, Mr. Matt from ORATS, had some interesting new ways to put on some protection that is kind of intriguing. Also, he weighed in on what he thought about this Omicron vol thing, and he's usually pretty prescient on this stuff, and he thought this had some legs from a vol perspective. So bear that in mind out there. Coming into showtime today, we are seeing, of course, back on the green side of the screen, Dow up almost 2%, leading the charge 1.8%. S&P not quite 1.5%, but pretty close to it, about 1.4% and change. NASDAQ saying, what Omicron rally? Only up 0.2%. And coming into showtime, we have seen vol all over the place over the last few days, as you might imagine. VIX got up to a high of a little bit north of 32.17. Haven't seen a 30 handle in some time, listeners. And there we are back again. Coming into showtime, we're at almost a little bit shy of 28, about 27 3/4 out there. And VIX cash, that's still up nearly 6 points from where we were on Monday, about 5.8 points. So quite the week it has been and continues to be. VVIX, get this, listeners, 149. Yeah, we're back in that range, listeners. That's up 21.5 points from where it was on Monday's show. And that's not even the whole story. It got up to nearly 161 in the interim between shows there, listeners. So, yeah, we're back in that. I think you could call it charitably frothy period for vol. VXX coming into showtime, about 25 3/4, up about 4 points, hit a high of 27.30. Since our last show. So, it takes a lot to get VXX to rally, and it takes even more. It takes a nuclear bomb to make UVXY rally, and yet we're seeing that out there today as well. Coming into showtime is at about 21. It's up 4.25 points from where it was last show. It hit a high of 22 and about 3/4 in the interim. And you follow UVXY, this product just is just driven towards death. It's on a constant death spiral. It takes Herculean efforts to make it rally. And yet it has rallied, 4.25 points and got up almost to 23 in the interim since our last show. So some things are afoot out there from that perspective. Vol Q holding firm at a nice jaunty 25, almost 25.5, about 25.4. Puts it up nearly 5 points, about 4.8 points from where it was this time last week. So spoiler alert, a lot more vol on the table, even than there was since Monday. Of course, we're off the highs now from a vol perspective, but give it a minute. This market looked pretty good this time yesterday, too, and then it got gut punched. So the gut punch could be lurking out there at any moment. And let's go around the horn. Let's go the opposite of the way we started. Let's go back to the Rock Lobster because he wasn't on with us on Monday. Didn't get a chance to weigh in on all this Omicron madness. Mr. Rock Lobster, we have left the zone of the monk far in the rearview mirror. Dare I say it, sir? Should I be warming up to Kenny Loggins? Is it danger zone time, sir?
I like that one. Is it danger zone? We are in the danger zone. And the simple reason is we keep moving. So we're at a 28 VIX, and the SPX is up 1.5%, and it was down probably that much yesterday. So yeah, we keep moving. I don't know what's going to stop us moving. I think more news about the variant might help, but I think it was a combination of things. Powell said he's going to lean on interest rates a little bit more, which is not great for technology stocks. So I found that interesting. And that you saw a little bit of a sell. I mean, the reality is, what was the top in the QQQ? 4 something, like what, 410? So it sold off a little bit. Everybody freaked out about oil. I think there's a lot of opportunity, like Boeing, opportunity there with where we are, because I don't believe any of this. I think it's all crap. But I've been saying that for a while, and it's going to end up turning out to be true. But the reality is, as far as this goes, I think the bigger problem was it was kind of a combination of the Fed. It was the Fed saying, "Hey, we're gonna raise rates faster," and I think that kind of, and that historically always takes some froth out of the market, somewhere between 10 and 20%. The fact that we have this COVID thing gives them a little cover, but the reality is we have 6%. You've got 5 to 6% inflation. The Fed has to do something because they're like a laughingstock now with their mandate and their interest rates. It's like, it's ridiculous. So they're going to have, Powell has a new 4-year seat. He's going to have to put some teeth back into a monetary policy. And then the market goes down. I mean, that's just the way it is. So I think VIX staying up here, I think it could stay up here for a while. If it keeps having these, huge gyrations, that's what happens. So, just for listeners, like when VIX is 28, you got to expect it to move 1.5 or 2% a day. That's why the vol's up there, because liquidity providers aren't dumb. They're just like, okay, we're going to move a lot. We're going to make stuff more expensive. So, I think this does put a bit of a cap on the upside, but now that they're actually going to kind of, or saying they are anyway, raise rates and kind of get rid of the silly taper thing, that stocks, some of the upside frost should come out of the stocks. And I think Michael Tusa will probably touch on this, but a lot of stocks are down way from their highs. I mean, you've got Apple, Amazon, Microsoft, Nvidia. Amazon really hasn't made a new high since last summer, but it's still at a pretty lofty price. But like secondary and tertiary stocks have gotten slammed. It's just the big few that have kept I think the broader index is higher. So I think that's going to start to run out of steam at some point. So anyway, that's where I think we are. Can we keep flopping around? I think what we'll probably see is more Omicron news, from everything I've read, because I can't believe how much I read about the stupid virus. It's just not that severe. So it's another virus that's not that severe. So, and I don't know how, I guess it gives governments another reason to freak out and just tell people to do stuff. So, of course, it depends what state you live in. So, anyway, I don't think the sell-off, if we're not selling off now after the Fed basically said they're going to start chopping or raising rates, and the SPX is only 100 points below its all-time high, I mean, you have to be realistic. The market still pretty resilient. So I think that's where we are. I would be surprised if VIX is higher this time next week than it is right now. I think it'd probably be back to around a 22. That's just, my feeling. If everything goes according to how it's been, it's playing out right now. It just takes a while for volatility to drop and everybody to get less excited when things are, let's just call it exciting.
Exciting is certainly the word out there. People are surprised in our chat. You made an 80s pop culture reference, Andrew. So you were alive during the 80s, just apparently not a viewer of the wrestling of that time, sir.
Oh, I was alive, but I was in college. I mean, the rest of the world didn't really matter when you're in college. There's too many other things to do.
So you're saying you were drunk for the entire decade of the 80s? So you went to college 2.5 times over the course of the 80s.
Well, let's see. For me, I was like 80s for high school and college. So you fill in the blanks on how
you were prime pop culture and wrestling age. Then you should have been right into it. You should have been loving the Hogans and all. I know some listeners are gonna get mad. I bring it up already, so we'll save it for the mail block. We got some comments about that a little bit later. I've seen in the chat there as well, some of you lamenting that you missed, like Luigi, you missed Dan Gramza this week on the Pro Q&A. Yeah, it was an awesome one. Dan, we might have to start budgeting 2 hours for Dan here because we were oversubscribed with questions. Everybody loves to hit Dan with questions. And B, his answers are epic. He could fill a whole show with one answer. So, yeah. But if you miss it, and you, Luigi, or anybody else who misses it, you know what to do. Just send questions in ahead of time via the members hotline. A lot of people did. We were kind of oversubscribed for this one. He's a popular one. I have a feeling we'll be bringing him back again. But yeah, if you're ever going to miss one, you can't join live. That's okay. We know people are busy out there. Just send in your questions ahead of time, and we'll make sure to try to get you routed in. Again, no guarantees with Dan. His answers are epic, but a fun one this week. Good time was had by all. Don't know what the hell I'm talking about, listeners. TheOptionInsider.com/secret club is the place to go. You can check out that one, all the archives, and participate in all the ones we have coming up. And they are pretty fun, if I do say so myself. You know who else was pretty fun most of the time? He's the uncleest of Mikes, Mr. Uncle Mike, sir. These are crazy times for a perma bull like you. We're rallying, we're selling off, we're rallying. Then we get gut punched and we sell off after the rally. So walk us through the last few days and what's been lighting up your tape over there in the saintest of Charles, sir.
Well, it's just easy. When the market rallies, you sell. Then when when it starts to dip, you buy again. It's that easy. I don't know what the big deal is. No. A couple things just to kind of add to Dan Graham's. I got to work with Dan a few times many years ago doing presentations. And if you guys ever get a chance to listen to this, man, it's just the way that Mark describes it is very accurate. There is not a futures contract that this guy does not know intimately. This guy is a futures trading encyclopedia.
It's almost scary. He's like a savant. You could throw anything at him, and he could go on about it for half an hour.
He could. It's amazing. He is the Google of futures contract knowledge. It's very impressive what he actually can say about it, and he's very current on it too. So. It's even if you don't trade futures, it's very impressive to watch and just to hear what the man has to say about it. He's very passionate about what he does, and it's a very impressive. Anything Dan Gramza does is very impressive to see. And so, with that, he couldn't possibly be making all of that up because no one could make up all that stuff. It's quite the sight to see. But anyway, the other sight to see is these markets recently. And so I was originally of the school of thought that this sell-off during the Thanksgiving week, especially the day after Thanksgiving, was just going to be some low-volume nonsense. And so, but I was not putting my money where my mouth was, thank God. And so with that, what seems to be happening is that we can talk about Fed raising rates. We can talk about the Omicron or whatever we want to call it. But the bottom line is that no matter how good markets are, there's always going to be some type of a pullback that's involved. So in looking at it, we're at levels right now to where we were in late August, early September. We pulled back to those levels. And so on this, though, if you just look at it, even if you're not a technical analyst, if you just look at a one-year chart of the S&P 500, it's very much at a 45-degree angle going to the upside, the whole chart. There's a few bumps in the road, but for the most part, this is still a very strong market. And then if you look at how it reacted last time it pulled back in early October, we're coming off a very strong rally from early October. I'm showing lows in early October, 42.73, and then it rallied almost 500 points over the course of the 7 to 8 weeks. 500-point rallies in the S&P are pretty big. And so one thing that happens when you have big rallies, I've always said it, big rallies begot big pullbacks. And so when that happens, it feels a little bit scary at first, but the reality of it is that if you want to rally that much, you're going to have some pullbacks that are a little bit more intense. And over the course of the last few days, the market's been very volatile. One thing that I'm curious about of how it's going to react over the course of the next couple of weeks, Sebastian said something on the show a few weeks ago about how sell-offs don't last like as long as they typically do because we're at such high volatility because most people already own puts. So not most people, but a lot of people already own puts. And so because of that, the second leg of the panic sell-off doesn't happen when we're in that scenario. So I'm curious to see how the high volatility or the amount of people that actually own protection could actually help this from not really going to the tank any further. Granted, we could continue to go further. I always remember 2007 when everyone thought there was no way the VIX could go above 30, and it went to 80 shortly thereafter. And so, I'm sorry, 2008. And so we definitely could have more of a pullback. We could have a sell-off. Who knows? But the one thing that, whether you believe in the Omicron, whether you believe that the Fed tapering is an issue, whatever way you slice it, and I'll talk about those two things in a second, whatever way you slice it, even if you think both those things are total crap, pullbacks happen, and what's happening right now. What I did recently, or actually yesterday, I finally couldn't resist the market pulling back like it did, so I finally sold some puts, and as of now, I'm happy that I did. But what I like about it is the fact that they're far enough out of the money to where market's going to have to go down a long way for it to hurt me. Now, does that mean it can't happen? No, it could definitely go down a lot further, no question about that. But I like the fact that with the VIX up higher like it is, I could sell these puts way further out of the money than I normally would. And if it continues to go lower, I have a little bit of a cushion to react to it. That's what I like about it. Now, in terms of the news that's happening in the market, with the Omicron, we're at a point where no one knows. It's early. Nobody knows. It could do this. It could do that. Who knows? That's honestly my stance on it. But the reality of it is that it looks like even on both sides of the aisle, no one wants to shut things down again. And Americans are very resilient from the standpoint that they'll go out. They may or may not wear masks depending on what state they're in. But I don't think that the Omicron is going to be a big, at least as of right now. I could be wrong because it could be a lot worse than they say. Who knows? I'm not a doctor. But from everything that appears to be happening in my judgment, I don't think the Omicron is going to kill the market. Next thing would be the Fed. And what's interesting about the Fed talking about raising rates is that we've just been kind of channeling recently at the 10-year note. So if you look at it, we had a little bit of a sell-off since pretty much mid-October for the last month or so. We've kind of been channeling. And so it'll be interesting to see how the 10-year note continues to react to this. The volatility in the options on the 10-year note has definitely gone up significantly over the course of the last few weeks. But what'll be interesting to me is when they actually start doing it and the anticipation of when and if they're going to do it. This is kind of like we're at a stage right now when the Fed talks about tapering or raising or lowering interest rates or whatever. When the Fed starts talking, this is kind of like the 10-year notes version of the few weeks or months leading up to an earnings announcement. So with that, I think it's pretty interesting to watch and see how the 10-year note does. We're definitely at the lower end of the, I would say, 1 year range, but we're at the higher end of the 2-month range. So I'm continuing to monitor that. We'll see where it goes. And that's my story, and I'm sticking to it.
That's his story, listeners. We'll see if it changes even by the end of the show because things are evolving rapidly out there. Let's get on out to speaking. You know what's evolving rapidly is the overall world of options. I mentioned earlier on some other shows, talked about it again on the Advisors Option this week, how October was a historic month for overall options numbers because remember last year, 7.52 billion contracts cleared over there at OCC, a ridiculous record by any ballpark, any stretch of the imagination. Most people thought we wouldn't get there anytime soon, if at all. And so coming into this year, the question was, can we possibly even come close to that again? Was that just a crazy aberration given this crazy nut job scenario we're in where everyone's home, they're panicked, and they're trading? And it turns out 2021 blowing the freaking doors off. In fact, already hit that level of 7.5 billion and surpassed it, over 8 billion by the end of October. Now, the numbers hot off the presses, listeners, just coming in. I love the folks at OCC. They know when we do our show. They're obliging to us. They send in the numbers right before showtime for us. We can talk about them here on the show. Hot off the presses from our friends over there at OCC. Was November a Rock'em Sock'em Robots month? The short answer to that is yes. The longer, far more involved answer is it blew the freaking doors off. Every month this year has been the highest July, highest October, highest November in the history of the options market. But November takes the crown now. November was the busiest month ever in the history of options since this idea was conceived way back over there. A glimmer in the eye of the Board of Trade to maybe create this CBOE thing. And it's a historic month by any level. 949 million, almost a billion contracts in 1 month, listeners. That's may not sound like a lot I know a lot of you are new to this business. You've come in since all this stuff has been madness. So maybe that sounds like that was inevitable. Trust me, when the Rock Lobster was cutting his teeth in this business, and even when I first started on the floor of the SIBO, the notion of doing close to 1 billion contracts in a month, if you had even uttered that, you would have been strapped in a straitjacket and said, "Get the heck out of here, kid. You're nuts." The highest volume month on record, up 40% from November of last year. I mean, these are numbers. At this point, I have no more adjectives to describe. I just got asked by the Stack folks to come in and do their options panel coming up in January to kind of look back on the year of 2020 and remark upon it. And it's kind of hard to have the adjectives anymore. It's getting ridiculous. I think what I told them, I said, let's just call it 2021, the year that changed everything, because it did. These numbers are off the charts. Literally, there are no words for this. And it's only going to get bigger. We're probably going to hit 1B soon. You know, again, I wish I could credit the person who said it on the network recently. They said, we wanted people to join the options market. We didn't know they were all going to come at once. And they all did. And you brought your friend, and you brought your grandma, and you brought your cousin Joe, and everybody else. And they're all trading options. It's amazing to see. This is something, if you've been doing this business for any amount of time, you know, to get this amount of press and ink and traction, usually it had to be some epic disaster, long-term capital, bearing, something else like that just dragged the name of options through the mud, made the D word, derivatives, a pejorative term. And in general, made, you know, this kind of thing, we usually was in a negative context. And obviously, from a broad societal perspective, the pandemic is awful. But from an options perspective, this thing has been just insane. Let's break the numbers down a little bit more. Obviously, they clear a lot of stuff at OCC. Total options volumes that we're interested in, 944 million, still pretty close to almost 950 million. Equity options, drill down a little bit farther, 898 million contracts, also up 40.3%. That number includes cleared ETF options. We break those out. They're 244 million, a 31.6% increase from November of last year. Index options, pull those out as well. That was 46.2 million contracts. It's up nearly 38% from this time last year. Even the futures, which seemed like they couldn't catch fire to save their lives over the course of the pandemic, a little over 5 million contracts. That's a 42, almost 43% increase from this time last year. I mean, it's crazy town. I think that's a technical term out there, is crazy town. I don't know, Mr. Uncle Mike or Mr. Rock Lobster. You know, we kind of have a 1-2 punch now of epic records. First, we beat the number that was set, the record for the year of 2020 that was set last year. Already we beat it by the middle of October. And now we have the busiest month ever yet again, and close to 1 billion contracts. What say you, gentlemen? Did you ever anticipate we would see such madness in the year that is 2021?
Well, I just for reference. So when I starting in this business, so you want just a reference time, it was 1 million years ago, but a big day on our entire floor was 90,000 contracts. Like, that was almost more than we could handle in a day. 90,000 contracts. Now, Ford trades 90,000 contracts in one strike. So just to give you a relative idea, and the PSE had about a 20% market share at that time. So, like, to give you like an idea of how huge the numbers have gotten. Now, do I wish that I was still probably a market maker? Yeah, maybe. I don't know. Am I glad that I'm in the option education business right now? Yes, I am, because we're growing by leaps and bounds. But I think I I think as people become more savvy, especially I think the internet has done a lot. I think low commissions have done a lot. So I think there's only growth ahead as people kind of grab their own money management by the horns, so to speak. And it doesn't hurt that you had kind of the memeville where, stuff like that used to happen like, once or twice a year, and it was happening on a daily basis in multiple stocks. So I think a lot of influences, and, we'll see if it can keep going. But personally, I think it's going to keep growing. But like I don't know if I invented this phrase, but options love a bull market. Bear markets, that volume will come down. It has, and all the bear markets I've been through, which is 3 pretty major bear markets at least. So volume will go down by like 50% probably. However, until then, you're gonna see a lot of action.
We are seeing some action indeed. I see the Flowmaster lurking around in the chat there. I'm about to get him on to talk about these numbers. He spends his days crunching this data. It's got to be just boom times for him over there as well. But yeah, these are just again. It's my job to talk about this stuff, and I am running out of adjectives. I guess that's a good sign for overall options volume. Let me just say, I never thought coming into this year, I was lukewarm on the idea that we could even threaten that $7.5 billion number again. It seemed like we were trending towards just rational common sense. People were going back to work. They have less time to focus on this stuff. And instead, they've doubled down in ways no one ever anticipated. Of course, obviously, the pandemic has unfolded in ways no one anticipated. No one thought we'd still be talking about new waves of lockdowns coming towards the end of the year, but that's where we find ourselves. So that also has played into this. But still, just insanity by any measure is what pretty much the only way you could chalk up these numbers, listeners. So yeah, clearly you are not alone in the world of options, listeners. You have been joined by everybody is now out there, and they're pretty much all buying calls. That's what they've all learned to do. That's another weird thing. The way they trade is so different. I mean, we've seen influxes in the past. Usually it's other things, and usually it's not everybody just buying out of the money calls. Yet that's pretty much what we're seeing these days. So yeah, just fascinating times, insane time. We love it. We love to see all the new listeners coming in, just enjoying the content, learning. Definitely, if you're just coming in, buying calls in meme stock of the day, you probably could benefit from listening to some of this content and learning to migrate your liquidity a little bit. But still, this is just crazy town, listeners. It's the only adjective that could sum it up. Crazy town. As we keep on rolling, let's look really quickly at the earnings vol before we keep rolling. We had some big names still popping off this week. We're kind of at the tail end of the season. Again, if you want to hear Matt's breakdown of all these numbers, check out the advisor's option from this week. He predicted a Rock'em Sock'em season, and we pretty much got a Rock'em Sock'em season. The first season we've had in quite some time where we're actually threatening outperformance. We're at a 99% right now, but this week 119%. So this week outperforming. Week 4 also at 114%. So 2 weeks firmly in the green. That's the first time since the pandemic we've seen anything like that. And then the week in between there, week 5 was 99%. So that kind of was flirting with breaking through. Week 1 was 98%. So we've had multiple weeks at break even or blowing through it. So that, again, that's all new. Usually it's red across the board. So fascinating stuff. We still had some names popping off this week, including Snowflake. That was a hot IPO for a while. Kind of cooled off. Maybe after the numbers this week, maybe they'll be hot again. 5 below. Dollar General today. Kroger and Marvell and Big Lots. We've got a few here for you. We've got Snowflake. They were at 311. They were pricing in 9%. They delivered in actually 8.9%, so close to 9%. They delivered 10.8%, and that was in the initial blush. I'm sure they've moved a little bit since then. Let's see here really quickly. Yeah, let's see. They're at 344.5, and they ran the supports at 351, almost 352 right now. So they're up even more than 11%, listeners. So yeah, quite the move there for Snowflake. Maybe they will be the hot options name again. 5 below. They were yesterday after the bell. 189, I should say, is where they were trading. They're pricing in 8.6%. They delivered, get this, listeners, 2.3%. That's back along the lines of what we're expecting from the earnings vol reports. Let's go to Kroger really quickly. Supermarket vol, was there any? Let's find out. Before the bell, they popped off today. 40.25 is where they were trading going into their announcement. They're pricing in 6.9%. They delivered, get this, listeners, 10.4%. Guess there is a little vol out there in the supermarket. It makes sense, all this pandemic talk and people lockdowns, people rushing to buy food again. There's food panics probably. So, and we're up even more since then. So it's up almost 11%, if not more, right now. So yeah, Kroger outperforming, Snowflake outperforming. Five Below dropping the ball a little bit there, but we shall see. And speaking of seeing, let's keep on rolling and do a real quick odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, we've been gassing on with Omicron and indeed the madness that was November from a volume perspective. So we're kind of coming up against it already. I want to make sure we have room for you folks to get on here. So let's do a quick run through of some of the names that we've talked about recently here on the show. Let's go back to November 4th, first off, to talk about the Rock Lobster's favorite name of all time. This is COTY, ticker symbol, I should say, easy for me to say, COTY. This is the multinational beauty and fragrance company. I won't tell you where they're trading right now. A bit of a spoiler. At the time, we were debating whether they bought or sold. We thought they probably bought, though. These 9.5 calls, you know, 9.5, they went up for 65 cents. That's the first print we saw. Pretty decent size, 9,628. It was close to the bid, though. Stock was 905 when they went up. Then we saw more prints going up later through the offer. Let's see, actually, these were actually a little bit before. So they were before. So they moved the offer. That's why the later print was weird. We saw 5,000 lot going up earlier, 58 cents, 5,900 for 61 cents. Total about 28,000 of these things traded on the day. And so it looks like they were feeling a little bit of the old upside call up, which again is the trade du jour out there these days. And let's see. The stock, like I said, was 905 when they started putting these up. Let's look really quickly, see how it fared over the course of the past month. This was a pretty short-term one. It was on November 4th there, so not that long for this one to review here. And they had a nice little run here. COTY went from, let's see, on the 4th when they put it up, it was about a little over $9. It rallied pretty hard up to 1081. So it had a nice run. And it kind of hung out there pretty much through expiration to 1035. So a nice run there. Again, obviously they paid anywhere between about 58 to like 65 cents. So if they had them all the way through the end, and these things went out about 85 cents, obviously. So they made somewhere between 20 and let's say about 28 cents. I'll have to dig in to see if they still had these open at the end of that time. And Mr. Rock Lobster, looks like they made, if they bought these, somewhere between a little more than $500,000 and $750,000. What say you, sir? Looks like they maybe hit it on these COTY calls, sir. The COTY call love paid off.
I remember this one. Because we did talk about this one. Let me see.
Oh, your memory does work. Okay, good. I was curious.
Wait a minute. Did you actually? You used to mark it. I think you're marking them now, and I say that I like them. I thought this was one that was a reasonable one, as I recall. Let's see here. So the stock is that was I didn't see it as I don't think we saw this as a sale. I think we saw it as a purchase. Well, wow. Well, they did make some money. I think this was a purchase. And we had seen some other bullish paper in here before, as I recall. There might even been a line in the sample that you put out on this quite a bit ago. Just FYI. So anyway, that's what I think on this one. So yeah, they made some money. No way around it.
Yeah, it looks like they came in and closed, actually, some of them pretty quickly around the 8th, so not that long later, and then a few thousand more on the 9th. So they didn't wait around, which you like to see when the stock popped pretty nicely. Options were over $1 when they closed some of these bad boys out. Stock was 1070 and 1081 when they started dumping them out. So I like to see people not just holding on for dear life. So they actually probably made, looks like, roughly close to 2x on some of these. So not bad here at all here on the COTY. Like I said, we got to kind of do a quick just the facts, ma'am, on these as we keep on rolling here. Let's go back to November 1st here as well. We've got everybody's favorite name. Let's see if the Rock Lobster can remember this one as well. This is Heckler Mining. This was a newcomer to the odd block at the time. Ticker symbol HL. We profiled a 9,000 lot, 9,304 of the Nove 6/2, going up for a whopping 12 cents, lifting the offer. That was about a 62 vol. The stock was nearly $6 at the time, right around $5.90 when it went up. They did more afterwards, total of 13,000. And unlike our previous friend where the stock popped and it had a nice run pretty quickly, let's see how Heckler fared. Let's go back a month. Because they had a run, but not quite the run they needed. Let's see. The stock was about $5.90 when they put it on. The stock started taking off, was trading $6 about a week or so later. Got up to, by the 11th, so 10 days later, it got up to its high of $6.44. So it got close to the strike, but also roughly 2 weeks later. So it wasn't exactly the immediate move that they needed here for these bad boys to pay off. So it topped out at $6.44 and looks like it came a little bit too late. And unfortunately, Mr. Rock Lobster, the stock closed. It gave it up. Quickly as it got it, it gave it up again because it closed at $6.03 on expiration, which was a week later. So not looking good overall. If they lost everything, obviously only 12 cents. You're talking a little over $100,000, about 110, 111,000. Actually, if you add up all the volume, about $1.50. So that's a little more. Not quite your girlfriend's Ferrari, but maybe a used one. But what say you on these Heckler Nove 6.5, sir? They were looking good until they weren't.
They were. I think this was more like a Thomas Magnum Ferrari, one of those old. Wasn't it an 8-cylinder in that show? Yeah, the 8-cylinder red one.
I know he had a Ferrari and it was red. I don't remember what type. I don't go that deep into the Ferraris.
I don't know. I can't remember. The listener will tell us. I don't know. Did Ferrari make an 8-cylinder? I don't know. All I know is the one I always wanted was a 6-cylinder. It was made in 1970 called Dino. Anyway.
I was always a Lamborghini Countach guy. That was my 80s car. That was the only one I ever wanted. Beautiful, yeah, horrible to drive, but beautiful to look at, and a poster on your wall when you're like 13.
I don't know. I still think about it. Maybe when my kids are gone or something. But I just like the look of the 73 Dino, fly yellow with chrome. It's pretty cool. Look it up. Anyway, I think this guy just got smoked. I think this was just sadness and grumpiness all about on these calls. You know, what's weird is you thought like the miners are really going to give us a little pop, that inflation pop. But every time that inflation story comes around, Powell just comes in and the algos just kill every gold stock. So I know Tusaw is a metals guy, silver, gold. But I find it every time you see the gold stocks starting to make new, like getting close to those higher levels. I don't think they've made new highs this year from earlier anywhere close. But just the Powell comes in and he says whatever he's going to say, but he doesn't do a whole lot. So we'll see if they actually start tapering and what the effect that has on the bond market and all that kind of stuff. So it'll be interesting to see. But yeah, the gold trade is not as exciting as it once was, even though you would think it should be. But I think that's what this person thought buying these calls, and they just
joy. They almost got there. It's almost worse if it almost gets to your strike and then retreats. If it just hangs out, you never really have a chance. You're like, okay, I never had a chance. If it flirts with it, and then so this guy probably could have scratched if he was diligent, but sounds like he wanted to go big or go home, and he went home. Unfortunately, looks like these were still open at expirations. Looks like he dropped the full amount. We got another one we can review here, but we're kind of come up against it. I want to get some listeners on here. We didn't have a mail block last week, so let's get to it. A little bit of the old mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, let's get to some questions of the week really quickly here. This week's question of the week. It got crazy pretty quickly. You know, we posted it on a Monday. We thought it would be pretty straightforward one. You know, will we close above or below 20 by Friday in the VIX? We did not anticipate the epic back and forth. We predicted probably something more along the lines of what we've seen in the past. We see the spike involved, and it slowly drifts down over time. And by the time Friday came around, maybe we'd be at or maybe even a little bit through that 20 strike. And, of course, Omicron intervened and said, no. And we had sell-offs and rallies, and then we had sell-offs after the rally in the same session. So all sorts of fun. So as a result, like I said, we're still firmly above the 20 handle right now, which is interesting because I think a lot of people dove into this poll early because right now we still have almost 2/3, 62% saying that it's going to close below 20 by tomorrow's exit. That would be an epic move to the downside in VIX. Not saying it can't happen, but it would be epic. Only 37.9% saying it's going to close above 20. I think if we reposted this now, maybe those numbers would be a little bit different. Obviously, you can't go back and change your vote, listeners, once your vote is locked in. But yeah, I have a feeling we'll have a few more votes coming in that will maybe lean towards the above 20. Does that surprise you, Mr. Rock Lobster, that we've got so many people still leaning on the below 20, sir?
I think below 20 is, that is, I think the low of the week was 22. And I would be surprised if we could get back to, Friday. So that was, I think we achieved that Monday. And then Powell just basically took the punch bowl and just spilled it over everybody's head. So I think 22 would be low, even by next Friday would be a. I think it'd be a stretch.
Since we're talking vol, let's go out to the live chat here. Nichols says, does the Rock Lobster need to add a pandemic zone to his vol zones to reflect our new reality of an Omicron or an Omicron zone? And Luigi also agrees. He says, kind of like a ludicrous speed zone from Spaceballs. I like that. That may be a confusing reference to you because I know you missed out on all the 80s there. But Spaceballs was a movie, and it was fun in the 80s. It made fun of Star Wars, Mr. Rock Lobster. And ludicrous speed. Maybe you do need a ludicrous zone. What do you think? Or at the very least, perhaps a pandemic zone. What do you say, sir?
I mean, we already have the danger zone as much as, we could rename the danger zone from time to time. We like the Omicron zone.
But we have the licensing deal with Kenny Loggins. All that money will go to waste.
Yeah. So I think we could license the Omicron zone safely. But basically, it's a 24 VIX is a 24 and above, which is about 1.5% per day, which right now is 60 points in the SPX, at least, almost closer to 70. So I think that's, and remember, that's the market on that's a 30-day average vol. So again, it's not exactly, the VIX calculation is a little funky, but anyway, that's where we are. I think zone 4 is, I think we're going to be in it for a couple more days, just because I think we want to see a little resolution somewhere. And without resolution, it's hard for VIX to go back down.
I just tried to fire it up to get the YouTube censors mad at us. I don't know sure if it's going to load in time. I was trying to get a little logins for our live here. It doesn't seem like it's going to load. Maybe sure it'll probably load right as we start talking for the next question. But who doesn't need a little logins in their lives every now and then? Yeah, it's not going to play ball with me. We'll see. That'll make the YouTube censors happy at the very least. Let's go out to this one. I don't feel happy with this next question. We'll just call him John. We won't even read his last name because I feel bad for this guy. He says, I lost a fortune on my 401k. He puts in parentheses 20 years worth from options trading during the 2008-2009 crisis. I kind of day trade options. I think it means I kind of day traded options at that time. I only have a few $1,000s left. Oof. Can I still have a chance to rebuild myself via dangerous options? Well, I can only buy calls or puts, according to Charles Schwab. Wow, there's a lot to unpack here. Mr. Uncle Mike, this is right up your wheelhouse. I'm sure you have people contact you with this in the past. He's a little late. He lost the money in 2008. He doesn't say what he's been doing for the last decade or so, but obviously a lot of new people playing in the options market, a very different game now than it was in 2008. I don't know what he means by dangerous options. Does he want to go out on a limb and really just swing for the fences? I don't know. He says he can only buy calls or puts, according to Charles Schwab, Mr. Rock Lobster. So our friend John here, or I should say Mr. Uncle Mike, our friend John here, unfortunately had some issues. It looks like he's trying to rebuild his account a decade later. What would you counsel him, sir, Mr. Uncle Mike?
I would say, how are you going to do it is the first question. Second question would be, what are you using to determine if the option's going to go your way? And the final one is create the system before you put one penny into it. Because if you've lost a fortune doing it, I'm not trying to be mean here, but typically says that you have a hard time getting out when you should. And so what I would do is, this would be an instance. Normally, I'm not much of a paper trading kind of guy, but I would recommend doing that for at least a year. Yes, I said a year before you risked any real money on it, given your past and your situation with it. And if you have success paper trading for a year with a system that you can create that would work well for you, then I would recommend doing it with half of your trading capital for another year. And then after that, I would say after 2 years of doing that, then I would say, and only then, of having success for 2 years in those instances that I mentioned, then I would start playing with a little bit more money on it. So if you're looking to do that, that's how I would do it, just given your history, because of the fact that you've already had problems with it. Jesse Livermore, the greatest trader that there ever was. And a lot of people view him that way. Fascinating book, Remnants of a Stock Operator, arguably the best trading book ever written. Chronicling his life as a trader, talks about that. When you're in that situation, you have to preserve capital at all costs. And that's how I would do it.
There you go, John. Maybe not the answer you wanted to hear, some silver bullet for regaining all of your losses, but certainly a reasonable approach to that. Maybe not quite the dangerous approach you wanted. Mr. Rock Lobster, while I try to fight with Kenny Loggins over here, do you have anything you want to add here for John looking to rebuild his portfolio from his 2008, 2009 losses via dangerous options, sir?
Well, the first thing is you like Mike said, but you have to have some risk control system. You can't, you only allocate so much per trade, and you have a loss per trade. You put on and you trade options and you think they're always going to work, right? Because you look at all the new platforms and it shows you what all the potential gain will be. But you don't really think what a potential loss can be and what you're going to do when you're losing. So you have to get control of that first if you ever want to try to trade options in any kind of serious way. So Mike's idea of some kind of a plan for yourself or just how you're going to manage in our system, if you can't do that first, then I think you don't even bother starting.
We have a good recommendation from our chat here. Age Del Aquarius, he says, tell this listener to listen to Options Bootcamp from yesterday and get some books. Yeah, we had a great Options Book Club episode of Options Bootcamp yesterday where we went through a lot of great books. Dan obviously talked about his book, but we also talked about a lot of great books that we've used. Of course, our favorite out there, Natenberg, one of the Bible that I was handed, most pro traders were handed when they walked on the floor of the SIBO. Also talked about Macmillan and a bunch of others out there. Talib, should you read it, should you not? All sorts of fun stuff. So yeah, John, it wouldn't be the worst thing for you to check out Options Bootcamp. Pick up some of those books. It's a lot cheaper than perhaps losing the rest of your portfolio, and take some of this advice, and hopefully over time you don't view options as so dangerous anymore. You start to realize that there are other ways, more risk mitigated, risk controlled ways to trade these things, and hopefully your story won't be the same. You won't have this outlook of this product. It'll be a better experience for you all around. James asking about crazy threads that go up in a few of these names here. Maybe we'll save that for, and that sounds like a good one for Options Oddities maybe tomorrow there, James. Maybe we'll save that one for there. We don't have time to get into it now anyway. Well, here's a fun one. Let's go out on this one. It's silly. This comes from Praveen Chirukuri. I hope I didn't butcher your name there, Praveen. I love our listeners. Even when they're giving us a hard time, they are ridiculously polite. So I love you all. He's clearly not a wrestling fan, Praveen. He says, hi, I'm a subscriber of the Options Insider Radio Network. Thank you for what you do. I'm one of those folks who has a very limited time in the day. I do try to listen to your pod. I love that, pod, as much as time allows. Today's episode of Option Block 1050 was especially grueling during the intro. It took literally 10 minutes to get into the topic of the pod. Is there any way you can keep the discussion on topic? If I'm not your target audience, please let me know. I'm not trying to be critical. I do like the content. I just need use my time efficiently. Thanks in advance, Praveen. Well, Praveen, thank you for being so polite. We welcome all comments, even if they are in the opposite. Most people love that segment there, the wrestling segment. That's why we keep it around, and because Uncle Mike requested it, so you can blame him. There are a few like you, Praveen, and the Rock Lobster, who aren't into the 80s wrestling zone. So yeah, the short answer is that 80s wrestling, guess that wrestling star, is not going anywhere on the Monday episode. So I would caution you on the Monday episode, the Option Block, which is also our kickoff broadcast for the week. maybe you just fast forward 10 minutes if you're not into that. It's no harm, no foul. We won't hold it against you. It's a podcast platform after all. You can skip ahead as much as you want. We don't hold it against you at all. But that one was awesome. In fact, Mr. Uncle Mike, as you recall, a couple of weeks ago, we did the segment on Brutus the Barber. And I tweeted out for you an image. I said I was going to share it with you of my awesome, which I still have on my desk here, my awesome Brutus the Barber Beefcake grooming kit. And I know you saw that. Guess who else saw it and liked it and maybe shared it on Twitter, Mr. Uncle Mike?
I give up. Who?
One Brutus the Barber himself.
No way.
Yes. So I'm sorry, Praveen, but if Brutus the Barber likes it, then we got to keep going with it. That's just too awesome. So Brutus the Barber himself
is listening to this show right now.
He might be.
Oh my God.
He might be listening right now. So maybe we have converted him to the dark side of options. If we have lured Brutus the Barber to the dark side of options, dare I say it, we have succeeded as a program. We have done our duty for God and country. So I apologize, Praveen, and for anyone else who doesn't like the 80s wrestling, including the Rock Lobster. But the Barber loves it, so we got to keep going here. And we got to get out of this show, so let's go real quick around the block. All right, there it is. No logins today, listeners. Maybe on Monday's show if this madness keeps up. Let's go around the horn. Mr. Uncle Mike, in addition to your deep, deep jealousy over my newfound close friendship with Brutus the Barber Beefcake, what are you watching for the rest of this week until Monday's show? And if folks want to get at you, where should they go?
Okay, I don't know if I can talk right now. Just the fact that Brutus the Barber Beefcake is involved with our show in some way, shape, or form. That is the coolest thing ever.
You've reached the big time, sir. Congratulations.
But with that, I will do my best. Just watching to see 4,500 on the SPX. Want to see if that can hold, because if we do sell off again, I think that'll be a key point. Also watching the 10-year note. It is closer to the lower end of its range, seeing what happens with that with all the Fed announcements. If you are looking to learn more about what I do as a financial advisor and how I use the option product, feel free to visit my website. There's a lot of content on there, stcharleswealth.com. I also have a YouTube channel, St. Charles Wealth Management, or you can follow me on Twitter at Mike Tusaw, TOSAW.
Maybe if you're lucky, I'll get my buddy Brutus to start liking your YouTube videos. What do you think? Just blew your mind there, Uncle Mike.
I can't even talk. I'm so excited.
All right, let's go. Uncle Mike, go settle down a little bit. The Rock Lobster's like, what are you guys talking about? He agrees with Praveen over there. Mr. Rock Lobster, what are you keeping an eye on until our next show on Monday? And then B, if folks want to get at you guys in the land of the pit, where should they go? What should they do?
I mean, do we have to throw cold water on Tucson right now? I feel
he is very excited. Dare I say, it might be the most excited I've ever seen him.
Excited as I've ever heard him. Watching, of course, watching VIX. Let's see if we can kind of break down a little bit. Will this rally hold? And some little surprising earnings announcements, like Kroger. I just actually had blowout earnings. I'm also watching Ford, like some crazy volume in there. And I'm just some stocks like PBR, a weird stock, but it's paid $2 in dividends this year. The stock is $10.38. So I don't know. It's a weird market. I think there's a lot of opportunities. You just got to be, you just got to have a couple of bucks to do something with them. But I think as of right now, if I had to guess, VIX will be lower next week when we do this show in a week's time. But we'll see how right I am on it.
There you go. And check him out over there in the land of the pit. Optionpit.com is the place to go to learn more. We got to get on out of here. If you want more in your ear holes, you picked a good day to be listening to us live. We'll be back in exactly 26 minutes now with This Week in Futures Options, breaking down all the action in the world of futures options. If you want more vol talk, guess what? I'll be joined by the once in future Dr. Vix, who's hinting he may not be the future Dr. Vix for much longer out there. So we shall see what all that means, what's going on in the world of all things volatility from a futures and futures options perspective, coming up in a little bit later. Of course, back again tomorrow, noon Central, 1 p.m. Eastern, for volatility views. And then for all of you folks listening live, you get a nice dose of options oddities. I got a feeling it's going to be some great oddness to discuss on the show on Friday. So stay tuned for that. Otherwise, we'll see you back here on Monday. Watch out, Praveen. There's going to be some wrestling with our next episode of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.